Time to look at more stocks to buy, because based off my last video, clearly I am a stock picking genius. No, not really, I'm not, but the last video that we did came out May 2nd, and a lot of the stocks did pretty well, such as Slack, ticker symbol WORK. I'm not a fan of their product because I don't think it's that useful, but the stock is pretty nice. Jumped over 20% since that video. Then we talked about Stitch Fix, which shot up almost 50% since that video, because clearly people are buying clothes to look real good at home when they're not going anywhere anyway. But hey, you gotta put that stimulus check somewhere, right? 50% in under a month though, like 20 days, not bad at all. Another one we talked about was AMC, which also shot up 50%, all on the news that Amazon was thinking about buying them. And of course that happened after we published this video, because I know Bezos watches this channel. That's why I make so many videos about him. But as you can see, AMC also collapsed. So if you had the right strategy, you would have sold out before that happened. And that's one of the most important things in investing, is knowing when to take profits. You want to hold long enough to get this upswing, but then you don't want to be too greedy, because oftentimes stocks do turn around. Not this drastically as in AMC's case, but I'm sure most of us have had those round trippers that suck. Lose all your profit plus more. So really it's a balancing act of how long you hold a stock. But decisions like that, including when to buy your stock, how much to buy of it, when to cut your losses, all those trade management decisions are what make up a full strategy. And the strategy and the trade management is the most important thing to be successful in the stock market. It's not about picking stocks. Even though we make these videos and we talk about stocks all the time, that's only a small portion of it. You need all those management decisions figured out before you even get into a stock. That's how you have that long-term wealth building in the stock market and be successful year after year. And if you're interested in learning how to do that, we actually put together a free training that goes over exactly how I invest in the market, including all those buy and sell decisions. Of course, we go over how to pick stocks too, but again, that's only one part of it. But there's a link to this training in this video and down below in the description and comments. It's a free training. So take that and you'll learn how to use my trade management principles to profit. But all right, let's get into some new stocks today. Because is this market looking a little toppy? Yes, a little bit. But hey, we might also just burst through this 200-day moving average. And if that's the case, and if this is a real bull market, then we're gonna want more stocks to get into. So the first one I got for you is POW, Ammo Inc. And this is coming straight from our premium macro ops research. So we're gonna get a little taste of the good stuff. And by the way, I always get questions about where this research is from. And the research is from Macro Ops, which is the investment research firm that I co-founded. So if you ever wanna see where all this information comes from, just go to macroops.com. These are the types of reports that we send out to our institutional clients right here. But okay, let's get into POW. And I know one of you was asking about firearms. It was months ago. And unfortunately, I couldn't find the comment, but here it is. We finally have research on a really good play here. And you know, he was asking about guns because everyone started buying guns like crazy when these lockdowns happened, as if it was the end of the world. A lot of people expected society to straight up break down, which it hasn't yet, and I don't think it's going to, but there was a huge surge in guns. So Ammo Incorporated, as the name states, they make ammo, which is very important when you have a gun, obviously. So they are a fast-growing ammunition maker designing very innovative products. And if you don't know about guns, like I barely know about guns, you would think, hey, how innovative can bullets be? But you're gonna see, it's pretty cool. And these guys reinvest a lot of their money into growth, and that growth is paying off. They went from 4.6 million in revenue in 2009 to 14.5 million in 2020. And they expect 30 million in revenues next year. And this was already happening regardless of this huge surge in gun buying. Now, their big innovative ammo that everyone loves right now is called their Streak Visual Ammunition. So Streak uses a patented technology that these guys created called one-way luminescence technology, or OWL. So what this OWL tech does is it allows you to trace your bullet. So if you're shooting the gun, so what happens is like the back of the bullet actually glows red. So when it fires off, it looks like a laser beam. Because normally when you're firing bullets, you don't see it take off. But with this special ammunition, it basically looks like you're shooting one of those lasers from Star Wars. It's really, really cool. So with that trace technology, you can see where your bullet is going. That's what a bullet tracer looks like right here, like a straight up laser. Now, tracer bullets like this have been around, but there's a few things that's unique about Ammo's tracer bullets. So in this case, you see how this picture is taken from kind of the side. So if you're standing to the side of someone shooting a gun, you could see the laser. So in Ammo's case, you wouldn't be able to see anything. The only person who can see the laser is the person standing directly behind the bullet. So only this guy right here with the hat. And why is it important for only the shooter to be able to see the tracing line? Well, if you're in combat, you don't want the enemy seeing where your bullets are going, because tracers work both ways, right? You could trace back to see where the guy is hidden. At least that's how I understand it. Again, I'm not a military expert here, but I do play a lot of Call of Duty, so because that's realistic. But that's what's awesome about their OWL technology, because it's one-way luminescence. So only the shooter sees it and can trace it. And another unique thing about this ammo that is causing causing it to take off is that these tracers are non-incendiary, meaning they don't generate heat. It seems like ammo is more into chemicals than actual like explosions and heat. So this Streak Owl tracer from ammo is the only one allowed to be shot indoors because its tracers don't pose a fire hazard. So you can see why retail people would be buying this up, because it's a lot of fun. But you can also see the military applications of it. And that's really the two sides of ammo's business. You got the retail guys, the gun enthusiasts, and then you got the military. And you definitely want the military because when you get a military contract, you know, you're set. And from a business perspective, it's really nice to have this unique technology that no one else can copy because, you know, there's a patent, because you can charge premium for it. And because these things are so popular, everyone's willing to pay up for them. So of course, much better margins for this company. That's the benefit of reinvesting into research so you can make cool stuff like this. So like it says here, military and law enforcement, they're a huge growth driver for this company. So for example, POW has pretty unique armor-piercing bullets, which is important in war. So these bullets combine two things. First, the OWL technology that we just talked about with the streaks, the one-way streak, laser beams, and then they got armor-piercing technology on top of that. So their version of these armor-piercing bullets are arguably the best military-grade ammo product on the market. And what's crazy is that they don't use explosive charges to pierce the armor. That's what most armor-piercing bullets do. And like I said, these guys are more into chemicals than explosions, it looks like. Because even for the armor piercing, they use chemical and mechanical reactions with the armor to penetrate up to half an inch of solid armor. And no other competitor can claim full armor penetration at 1,000 yards. Plus, you can see the bullet travel to its target because of the laser technology. You can see right here what the pictures look like. Really interesting, the mark that this bullet makes around the armor. I guess that's the entire chemical reaction thing. And you can see here the bullet is poking out, went through this solid piece of armor right here. This is what I need in that Warzone game. Incredible technology. You can see right here from this chart that ammo has been beaten up pretty bad, so this is pretty much a turnaround play. But as I've explained, they got some really sick technology backing them up. They've done a lot of great things investment wise, and it's looking like some great military contracts are about to hit. So this is one of those companies that after being beaten down so much could make a huge run. Look, it's priced under $2. This is basically an example of one of those explosive stocks that I always talk about. No pun intended, but then again, you know, they work with chemicals instead of explosives. So no pun at all. Okay, next stock. We're jumping into Peloton. Peloton right here, PTON. This research once again from MacroOps, but in this article, our value guy, Brandon, he breaks down every single value fund's quarterly letter. So this one is from Greenwood Investors. And basically we use it for idea generation, which is exactly what this video is. So Peloton, we all know Peloton, right? The indoor stationary bike. Well, Steven, the manager of Greenwood Investors, is heavily invested, and here's what he thinks. He says Peloton sells its stationary bikes and treadmills for about 10x the cheapest competitive offerings. Yet it still manages to save its 2.6 million subscribers significant sums of cash every month, because the value of Peloton lies in the millions of hours of content, as well as live exercise classes. The monthly subscription fee of $39 is dwarfed by the monthly bills of boutique fitness studio goers, which number over 30 million in the United States, and they pay over $30 a class for that endorphin rush. And you know what he's talking about there, right? Like SoulCycle? Any of those bougie fitness classes, yoga, whatever, that all the middle-aged white ladies go to, right before they head off to brunch. So buying a Peloton, even though it's crazy expensive, like he said, 10x more than the next competitor, and then you got that $40 subscription fee on top of that for the content, that's still so much cheaper than going to these studios. And sorry, it's not just middle-aged white women doing this, you know, it's white women in their 20s too. And that's actually great business sense right there. If you want to be a good investor, if you want to track the best trends, then just follow what white women are doing. They say that about real estate too. If you want to know which area is being gentrified, so you can buy up the houses, you know, and gentrify it some more and then make a profit when it becomes way overpriced, you got to see where all the white girls are going. Because if the white girls are going there, then you know it's safe enough that other people will move in too. They're the big signal. That's what a real estate investor told me once. Is it racist? I don't know. He's white. And I don't think the white women mind. I mean, I go to brunch with them. We have a great time. I love bottomless mimosas too. And I love white women too, just like everybody else. And another incredible thing about Peloton is just how strong their brand is. Because nowadays, what do you call it when someone has a bike in their house? You know, a stationary bike. You don't call it a stationary bike. You don't call it a Bowflex or a NordicTrack either. Regardless of what it is, what brand it is, you basically call it a Peloton. Hey, you got a Peloton? When a word seeps its way into the culture like that, then you know the company is probably doing pretty well. And you can see Peloton here is breaking out of an inverse head and shoulders pattern. So it might be ready to take off. And remember, when you're looking at chart patterns, you really want to look past the pattern and into the psychology of what's actually happening. So in the case of an inverse head and shoulders, and of course the reverse applies to a head and shoulders pattern, but the way you should read this is that what you had here is an area where investors investors thought, hey, this might be too overvalued. So they start selling. So that forms this top right here. But eventually they sell to a point where other investors think, hey, this is a great deal, and they pile in. And that's where you get this slight up move. So you got this little hump right here that forms the first shoulder. Now, if this move kept going, then obviously it wouldn't be a head and shoulders, right? It'd just be a temporary dip. But as you can see here, right before it hit that previous high point, people started selling again. So what does that mean? Well, it could mean that the people who bought here near the top waited, and once they got back to around that price, they started selling so they could, get out at around break even. And what that represents in the stock is weak hands, people not holding on to the shares. So from there, you get that cleared out, and then the selling really begins, and that's where you get this big dip. So like the secondary bottom, which is a lot lower than the first one. And this is what forms the head. Then once again, the same thing happens. Eventually, buyers start stepping in, saying, hey, this is a great deal, and you get this rally. But you see it ended once again right where the previous high was, over here. So what could that mean? Well, some of the buyers who got trapped here, and some of the buyers that still held from here, now that they're finally right where that previous high was, they start selling again. And you can see how incredible it is that it gets that close to the same price. Sometimes that happens, to the point where you can draw a straight line like this. Again, it's not magic, it's just psychology. It's people thinking, okay, I bought here, it comes back to here, let me sell. This is what they talk about when they say overhead supply, because there are just people waiting to sell right here. So even right here, when I was talking about the general market, hey, it's rubbing up against this 200-day moving average, and this is a resistance level, not only because at this point in the markets, everyone uses it as a psychological mark, but also because of the same supply-demand principles, where people who bought around here are interested in selling. For example, it's pretty close to this little mini rally that we had right here. So some of those guys might have been stuck and they're looking to sell right here. So you hit that resistance point right there, and once again, these people start selling, but you get a higher low this time, meaning there's more strong hands, and eventually it rallies back, and that's when you want to see this breakout. So this is a pretty nice head and shoulders pattern right here. Well, inverse head and shoulders, which is a bullish sign. So now that it's gone through this whole basing process, all the strong hands are in play, broke out, ready to run. So that's kind of how you look at various chart patterns. No magic involved, it's just psychology. Psychology on paper, so you could read it easily. That's the whole point of charts. And for our last stock, we got Carvana, CVNA. And these guys operate an e-commerce platform for buying and selling used cars in the United States. So if you jump on Carvana, you could research and identify a vehicle and then inspect it using the company's proprietary 360-degree vehicle imaging technology. So you could obtain financing, purchase the vehicle, and even schedule delivery or pickup, all online. So Carvana is a position at Hayden Capital, which we've covered before in a previous video. Fred Liu runs it, and mostly he's in Asian equities, but this is a little different right here. So Fred said that Carvana seems to be following a similar playbook to Amazon. So Amazon educated the consumer and changed online shopping habits with its own business and Amazon Prime, and Carvana is trying to do the same thing with shopping for cars with its marketing and hassle-free experience. So once they prove the market with their own inventory and build a trust, traffic, and infrastructure, Amazon eventually opened up the platform to third-party sellers and provided them with the tools to succeed. So Carvana could do that same play. They basically be the Amazon for car shopping. Now, if you're thinking, what's the point in Carvana? Won't Amazon just buy them or create their own thing because Amazon eats everything? That is a possibility. Amazon is a competitor to every online business. But what usually happens is that these niche, smaller businesses, even though Carvana isn't any small business, but compared to Amazon, but these businesses, by focusing just on what they're doing, one thing. So in Carvana's case, cars, they just do it so much better than these huge companies like Amazon. So something that you'll notice at these big tech companies like Google, Facebook, Amazon, innovation kind of dies internally. And that's kind of an organizational studies thing. The bigger a company gets, the less efficient it gets, the less innovation there is. And this goes for every company, and it's always happened throughout history. And it even happens with these tech guys who you think would be so efficient, and they're all about building the next great thing. But what have you seen happening? For example, Facebook, Instagram, their next huge growth thing. What was it? An acquisition. WhatsApp, messaging, another acquisition. The whole VR with Oculus, an acquisition. So I think at a certain point in a business's life, more than innovating yourself, you're just buying the smaller guys. Then you get into this huge, massive consolidation, and you have what we have now, just a few big tech companies, which is not good. But it's happened before, like GE. How many things did they buy? Conglomerates, right? Eventually it goes bad though, or the government steps in. But these smaller companies that are focused on one thing, that's always going to be a good thing because it's going to introduce competition in the market. And here I go talking about Bezos again, because like I said, he definitely watches this channel. And I love him and all, but I don't want him ruling over everything. That's just not a healthy economy. So Carvana is definitely one to watch, and you can see their chart right here. They're just getting out of that big dip. Now, we just went over a lot of research in this video, video. But in my actual strategy, I pretty much skipped the research because I've streamlined it to a point where I don't need to spend all this time. Like I said, a lot of stuff like this ammo detailed report, that's for our clients. And our clients also use this strategy that I'm going to talk about in this training, and they use it as one part of their portfolio, but they're managing a ton of money. So it makes sense that they have multiple strategies. In my case, I just use this one. And again, with this training, there's a link in this video and down below in the description and comments. You can see how it works and how you can use it yourself. Definitely check that out. It's all free. It's going to help. And if you like this video, make sure you subscribe because we're going to be making more. So subscribe and I will see you in the next one. Stay fallible out there. Bye.